Hi traders, welcome back to another trades review video. So for some of you who are new to the community, so every week I will ask any of you or any of my students to actually send me their trades over the week that they took, and I'll do a review for them. So this is a very simple yet very powerful lessons as I go through your journal, as I go through your review, it helps you to better understand what if I were to put into your situation at that point, how would I manage the trade, or would I even consider taking the trade? Is it a good setup for me, from my perspective, or is it a low quality setup? So in that way, you can really learn from my thought process, and it helps you to generate better trade ideas and create a better filter next time. So let's go on to the trades. So there's a couple of positions here, about 6 to 7 trades, and if you look at this one, is on 30th of May. I actually forgot to review for this particular member, so I'll just do it back again. If you look at 30 May, he took a short position on gold. If you look at the 4-hour, it was right here. So price position wise, how would you all think? What if we go up to the daily? If you all still remember, I kept highlighting the fact that I'm still bullish on gold, mainly because on the daily we are still on an uptrend. Yes, some of you may say, hey, seems like we are forming lower highs, but if you look at the daily, if you look at the weekly, you can obviously see that we're still on a beautiful flow to the upside, right? We have some nice impulse, we have some pullback, testing major level of structure, then we get a nice rejection. So obviously that was a loss position on this one, but overall I will say the setup itself wasn't invalid because he was looking at the lower time frames. Obviously he was looking for some sort of break and retest here, but every time I also say that if you are looking to take any sort of break and retest or anticipate any sort of breakout, make sure you go to the high time frame, perform your top-down analysis to make sure you don't trade at a poor price position. On the daily here, you can obviously see the level that he traded was also a key level support, a daily time frame support. So if you short at a support, you know it's not a very good choice, right? So the first trade, I would say price position was poor, but obviously the setup was valid because it's a break and retest, but you were looking at such a low time frames that you forget to actually analyze the high time frames. And I also say a lot of times this is a major level of support at 1940. Go back to our trade calls, our setups breakdown, whatever. I say it a lot of times actually. So the second setup was good. So I love the flexibility here. So the next day on 1st of June, after this trader realized that, hey, we have a beautiful fake out around 1940, then we get that massive reversal here. He realized, hey, we actually formed a high-low support at 1955. That's why he decided to take a long position after seeing price rejected this structure multiple times. You can actually see this one. We have a support level, resistance now turns support. So price pulls back very nicely. Then he took a long position at the support at 1955. Cover all the way up. The position was actually covered a little bit too early. You actually left a lot on the table, but I understand where did it come from, because if I put on the replay mode, I think you were probably concerned that what if price go up to the previous minor swing high, then come all the way back down, we just sort of chuck here. Because if you look at the price action here, it was still a little bit messy. That's why I understand your concern as well. Overall beautiful setup, about 2.6R, very good position. So the next position on gold, fast forward, we're at 14th of June, this Wednesday. So you took a long position here. I wouldn't say it was a bad trade, mainly because definitely you have seen that the triple bottom rejection at 1940, and after that I think you actually started to drop down to low time frames and you saw a structural shift. What is a structural shift? It means we have an obvious downtrend from an intraday perspective. Then we have a nice break above that 1945, come back for a retest, and that retest, this pullback is what we call a bull flag, right? Beautiful bull flag here. We have a completion of the bull flag, a deeper pullback, equal low retest, then we actually run higher. So it was a beautiful run, but what I will suggest you all is every time when you see price having a massive momentum like this is what we refer to a parabolic move. If price have a parabolic move, then all of a sudden you see some sort of candle like a spinning top, or you see some sort of candle like a bearish pin bar. Just observe the next 4 to 5 candles on the 50-minute. If the next 4 to 5 candles doing things like this, slowly chugging down, which is exactly what the price was doing at that point. If you start seeing price slowly chugging down, that is a massive signal of weakness. As in, we have the massive pump. It could be, based on news, it could be an empty block. What is the empty block means? At that point, there wasn't actually a lot of buyers, but we just have a lack of sellers. So you can think in terms of supply and demand. If there's 10 buys at that point, it wasn't a lot, but there's only 6 sellers. So ultimately, you'll still find buyers overcoming sellers, but that pump was caused by what? Just a lack of liquidity. That's why you see that massive pump here. After that, price just sort of consolidated sideways, then we immediately just reverse back down. So this should have actually, it shouldn't been a, I know it's a break-even trade for you, but it could have been managed a little bit better. For me, I wouldn't even let this position run to my break-even. I would have just trailed my stops under this low, because if price just keeps chugging like this, guess what? We have that massive sell-off, and that sell-off was also caused by the FOMC. And I've said a lot of times, FOMC is not really a good condition to trade. If you're trading NFP, CPI, unemployment rate, interest rate, government speech, any sort of things like this, these are still fine. But FOMC are extreme high impact news, which if you trade it, even if you have a stop loss at break even, you could have gotten gapped out. So if you all go back to one of my previous trade recap on gold, all of you know that on Tuesday I actually took a big hit on gold because I was holding my position through the CPI. Stop loss at break even, I still got massively gapped out for about 8,000 loss in total, 11 to 12,000. So gold on this one, it wasn't a bad trade. It was actually a beautiful move, as you notice that, hey, we have that short-term structure shift, but in terms of management, it wasn't as good because you could have trailed stops too, at least 1R, 1.5R. Move on to GU. So GU, you took 2 positions, both are at break even. If you really see, this trade was technically the same thing as well. It shouldn't been a break even, because if I were to hold this position, I'll give you the criteria like this. So the way you long the setup was very simple. You saw that price was testing. We just broke above the structure at 125.40. Then we got a nice retest. Then you took a long after you see a second wave rejection at 125.40. So after seeing that price starting to consolidate like this, then we have a nice break above. If price, remember, we had some really long consolidation here, which means it took a lot of digestion to actually for buyers to digest the amount of sellers here. So after we broke through the high with that massive candle, it shouldn't come back anymore. It shouldn't come back. If you still see price come back, that is a sign of what? A double top. That is a big sign of a fake out, a double top setup. So this position, same thing, although you didn't lose any money, but also one good thing for this trader is every time when he realized that something's wrong, he would move stops to break even, which on one perspective is sort of he's very well aware of protecting his capital. That's why he do this sort of break even management. But I will still say it could have been a winner, at least a small win, whatever. It could have been a winner, because if you really drop down to the 5 minute, you can see how price, after it started to have the fake out under this area, we just keep pushing lower and lower, a bearish pin bar, rejecting this structure, then we just keep pushing lower. So that wasn't actually a very pleasant trade to hold as well. If I were to hold this position, it would have been extremely uncomfortable. So for position like this, it's better to trail your stops, or at least you trail it under this low. Imagine if price just broke through a fresh high, still able to come all the way back to this previous low. It doesn't make any sense as well. So again, a beautiful setup, but in terms of the management, it wasn't as good. So this position was a trade that you closed out early because you decided to go to bed. You took a position, should be right there, after seeing price having that squeeze. So squeeze is a price pattern that I also talk a lot in our community. A nice beautiful squeeze here, keep chugging upwards. So what is squeeze? It's basically when you see a moving average cross, then you start seeing price keep trying to just lean against or stick against the EMAs. That's when you usually will see price pushing into one direction very aggressively. It's a period of accumulation. All right, so we have that grinding upwards, or what we call a squeeze. Then we have the beautiful breakout. You actually traded the retest, then we just keep pushing higher. So you close this position for break even. You actually closed it right there, then just to realize that price actually run a lot higher. So it was a beautiful setup, beautiful quality. It's a 4-hour trade. If you hold it long, it would have been a 10-hour. But yeah, some of you who was watching this trade review, you might think, hey, why do you move stops to break even? It has so much potential. But understand this from these traders' perspective is he was focusing on his discipline as well, because he's going to bed. He didn't want to have that concern overnight. That's why he decided to close the position, break even. Maybe the next day he still has opportunity to actually get back in. So there's no right or wrong here. Beautiful setup. Although you close it out for break even, again, still beautiful. So the last position here was actually dollar yen. So this was actually an unlucky trade, and I personally took this position as well from top to the bottom. So after seeing that beautiful wedge pattern, so this was a trade that I call in our trade calls in the community as well. In our daily trade call, we have that wedge reversal here. I actually took my position right there, covered it fairly quick. I covered my position right here, and then you actually took the same trade, but not sure why you entered a position there when you realize that we already have a broken structure. You could have entered right here. See that? We have a short-term structure shift, break of that 141.17 structure, could have put a sell limit order here, stop loss above, at least, yeah, beautiful stop loss placement, then hold the position all the way down. So it's just, this position was good as well. It's just your entry, because you enter right there, which gives you a slightly worse price position, because you know that price pretty much will get sucked back into that 141.70. Not sure if you were being impatient or you were following your rules, seeing that maybe you saw this as a bearish continuation pattern. But yeah, overall it's still a beautiful trade. If you look at the 30-minute, we indeed run all the way down. So that's it for the trades review, and I hope all of you learned something new. For whoever new to the community, if you have any positions, remember to send it to me personally, and I'll talk to you later. Bye bye.